the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
You might have noticed a change in Bitcoin's price behavior. It's holding firm above $108,000, and that's where it's been for weeks. Have we seen the end of the wild dips and rallies that accompanied previous Bitcoin cycles? Some certainly believe so. Now, what's equally interesting is that Bitcoin's dominance of the crypto market is hovering around 60%, and that's up from 40% a few years ago. What this tells us is that Bitcoin is the main game in town, and the promised altcoin season has yet to materialize. To help us break down the latest happenings in the crypto market, we're joined once again by Shivan Mudli, macro strategist at 88. Hi, Shivan. Thanks for your time again. What's your take on this? The fact that Bitcoin seems to be shaking off its reputation for volatility and its price is holding quite firm at above $100,000.
Hey, Kieran. Yeah, good to be back. There's a lot happening. I think the Bitcoin, as we previously known, for people that are in the market for a very long time, and for the guys that are coming into the market now, is that for the old guys, you can see how Bitcoin has matured as an asset class, not as a crypto. While being generalized as crypto, it sort of created this, I should say, more neutral tone in terms of where it stands and resembles more of this commodity cycle that we generally see, because as regulation steps in, as more institutions play in this market, there's more opportunity, or there's, I would say, liquidity is taken out of the market from these institutions. But the benefit is there's less volatility, there's more control in liquidity, where liquidity is. But we're seeing the younger guys coming in, the more new guys into Bitcoin and into the crypto market, really trying to find the best possible price and being shaken out, particularly when rebalancing kind of happens from an institutional side. So, but when we're looking at the market from an overall volatility point, a lot more mature than where we were in previous cycles over the last 10 to 15 years.
I think what we're also seeing is as soon as there's a drop in price to below $100,000, the buyers enter quite aggressively into the market. And that seems to be the difference this time. And that's institutional, right? We've now got exchange-traded funds. You've got a lot more institutional participation in the market. And you've also got Bitcoin treasury reserves. There's something like 350 companies that have Bitcoin treasuries now. Everybody looking for any dip to pick up the slack.
Yeah, I agree. I think there's everyone sort of experimenting with this, and I did myself with the 88 team, and what we noticed is on the last 5 to 7 year horizon in the past, looking forward, with a structured treasury approach, SME businesses were generating roughly from 37 to about 48% in real asset value on their balance sheet by adding a combination of Bitcoin, stable coins, and a bit of ZAR in long-term money market deposits as well. So it's an offset that we're seeing, and we're starting to see in South Africa, where SMEs are looking at this function of a treasury reserve and using this dollar cost method to accumulate in South Africa. I know Altfest, it was also a popular name in South Africa. They have taken on Bitcoin as a treasury model, treasury reserve for them as well. But when we're starting to look at the US companies with models that are happening and IPOs that are coming out and IPOs that are becoming popular because interest rates are so favorable in the market and M&A deals really soaring. I think Figma was a recent IPO announcement that was coming, and they noticed that there's Bitcoin sitting on Figma's balance sheet. And that was really interesting. I think it was Figma. Let's actually just double check that. But it was an interesting read in that case. But when we're starting to look at businesses that are overall scaling with treasury reserves, they're finding this alternative method in using crypto or Bitcoin in this form as longevity, as an inflation hedge to maybe currency volatility that they may be experiencing in their business, also to offset depreciation of particular assets on their balance sheet with this aspect of cryptocurrency as well. So long-term objectives for SMEs and corporates is to really find this offsetting instrument to grow their asset value, which is really interesting. I think it's going to become more popular, and obviously with these treasuries and companies taking out liquidity in the market, it makes it really interesting for retail markets to actually source liquidity and try to see where they can pick up some sort of Bitcoin. And with that, obviously spreads become a bit more expensive as well, particularly on the OTC as well as the exchange flows as well.
It's interesting that you mention SMEs getting involved in Bitcoin reserve strategies. Altvest is listed on the stock exchange, a fairly small company at the moment, but it looked like it's got fairly aggressive growth plans. I'm quite interested to find out from you how SMEs get to, how do you convince them that a Bitcoin reserve strategy is suitable for them? Are you a kind of a leader in this at 88, or is this something that they've come across organically themselves?
So being so, I would say, diversified as a business operation as 88, where the advantage is, and my background is taking that corporate traditional treasury and really transitioning it into what does it look like in the next 5 to 10 years. And crypto treasuries and crypto assets are something in which corporates and CFOs have thought about it, but really struggle to understand how does the on-chain analytics, how does custody work, how does this actually impact my growth projections and my forecasts as well. And the advantage there for the SMEs, and this is SMEs that are maybe looking at 4 to 10 million rand in revenue, are really looking at this case on when they're making monthly returns. They're trying to use this dollar cost average method in which we've assisted some SMEs in terms of having that custody function and using structured approaches in order to grow their asset value. So we've started this product quite early this year. It's been quite versatile, and I loved working with it. It's a brainchild of mine that I've been toying around for the last 3 years. And we finally put it into action into some of the SMEs that work with us as well, that are exploring this but are looking for that offsetting hedge, whether that's coming from the rand or whether that's coming from inflation. There's markets. These structured products offer this real asset value to their balance sheet in the long run.
And just give us those figures again. You said that there was a 35 or a 37% bump in asset value, I guess because it depends what period of time you're talking about there, but because the Bitcoin price itself has gone up. What are those figures?
Yeah, so when we're looking at a more aggressive strategy, so meaning their SMEs are holding a lot more Bitcoin, they're seeing on the upper end of around about 47% of growth, whereas the on a more conservative approach, that means that they're not looking at more than 15%, but between a range of 7 to 15%, 10% being sort of the median in that case. For these companies, they're benchmarking at around about 35 to 37% in that asset growth, meaning that they value when they put translating that revenue into the market, or translating that revenue into Bitcoin and into this treasury fund, I should say. It's not, oh, it's a treasury fund for them on the balance sheet, right? And they're using money market rates to offset any volatility in the Bitcoin price, but Bitcoin's been quite stable. So they're using the function of money market rates to offset that on different durations, whether that be 3, 6, and 12-month durations. And we're then created a functionality for them to manage and optimize their cash liquidity for short-term payments. So the Forex desk in which runs, and that's been sort of a product that we offer at 88. with this product, they're able to cash manage their treasury function in order to maximize payments, but also with offsetting the rand, they've used Bitcoin obviously to sell and buy at different rates in order to optimize the depreciation in the rand, and that's been advantageous to SMEs. Some of them play with it. Some of them are just buying and holding for the long term. Some of them are more sophisticated with cash products, and that's how it evolves. Some of them use USDT in a combination of physical dollars, fiat dollars, and some of them use stablecoin dollars as well in order to create this new treasury model for themselves. And that's what I modeled, and we offer them that advisory and guidance, which has been a major benefit for them. So I loved building it, being a brainchild for a long time, and seeing someone use it effectively, I think gives me a lot of pleasure, and I hope that crypto would eventually evolve into this new treasury function, which I've been part of the space for such a long time.
Yeah, it is interesting that companies, not only in South Africa, elsewhere around the world, have come to realize the hedging benefits and protection against inflation of stablecoins and Bitcoin, and sometimes used in combination, sometimes as standalone products. I just want to talk for a minute about the Bitcoin dominance issue. When we talk about Bitcoin dominance, we're really saying what percentage of the crypto market is owned by Bitcoin. Now, a few years ago, that was 40%, and people were saying, wow, the altcoins are taking over. Well, that's not true, because Bitcoin has bounced back. It's got a market cap of $1.8 trillion at the moment. Nearly 60% of all crypto is wrapped up in Bitcoin. So the dominance has actually increased remarkably over the last couple of years. Why is this? What's going on? Is this becoming the only game in town, Bitcoin?
Yeah, I mean, when we're looking at the overall aspect of where Bitcoin was to where Bitcoin is, I think there's this evolution of everyone holding Bitcoin. Everyone wants a little something of Bitcoin. And everyone realizes that, yes, Bitcoin's above 100,000, but it's not a bad time to actually buy Bitcoin. Some people are buying 1,000 rand, some people are buying more, and they're forgetting about it. They're buying it and they're forgetting about it, whether that be in a custodial wallet, meaning that companies like 88, Luno, Vala that hold custody for you of your crypto, or you're holding it in non-custodial wallets, which you own your private keys to. And when we look at this, I should say, the balance between Ethereum and Bitcoin, those ratios, we're seeing this ratio really dip significantly as well, meaning that even layer twos on Ethereum are not keeping it as popular as it should be. However, it is become this, I should say, this prominent player for larger securities. And what's interesting is when we're talking about Bitcoin dominance, we're also looking at how the Lightning Network, which is this payment rail within the Bitcoin network that has evolved over the last few years, and why it has become so popular. It's when you look at larger transaction fees in, let's say, Ethereum. And Ethereum, you're still paying, when you're doing those large volumes, it makes sense for the larger institutions to actually take advantage because of the security layer in Ethereum. But when you start looking at these transactions, which are smaller, so it means that the Bitcoin network becomes some sort of store value. In economics, it's quite a popular term. And that means that, Kiran, if I transferred 10 Rand, 20 Rand to you, maybe $100 to you, I don't want to pay almost $1, $15 for a transaction when the network is busy, and the Lightning Network really improves that, meaning that smaller transactions are able to transact more efficiently at a lesser premium than it would be on Ethereum. And I think that's where the advantage comes in. I think there's people are slowly evolving and adapting to where the Lightning Network is. And I think there's advantages in looking at that Lightning Network.
Right. One of the reasons that Bitcoin is one of the suspected reasons why Bitcoin is holding so firm at above $100,000 is there is a meeting of the regulators in the United States in July, later this month, where they are expected to make an announcement about interest rate drops. So it looks like there's a bit of front running going on. Just talk about that. What's your take on this?
Yeah, so I did some research and we were chatting about it as well. So how is Bitcoin front running the interest rate market? And what's really interesting is that when we start looking at exchange on-chain analytics, looking at exchange liquidity, net inflows overall, we're seeing that there's a minimum of, I would say, 10,000 Bitcoin leaving exchanges over the last couple of months. And that's been quite a prominent play by institutions, fundamentally on the basis that they're moving into cold wallets, they're moving to things of exchanges where they know that they're holding for the longer run. And when looking at that, that means that even the retail market to a certain level as well is also assuming the same principle in that Bitcoin, considering where it is now, has a lot more room to grow. And with that, people are moving off exchanges into their more self custody wallets. And when we start looking at stablecoins within these ecosystems, stablecoins are also sitting on the sidelines waiting for something to happen. And I think that's where the price discovery comes in. And as you mentioned earlier, anything below in 100,000, you're seeing a lot of these guys step in and buy up the liquidity, and that's being seen by the stable coins that are sitting on the sidelines on these exchanges.
Right now, there's been a lot of developments around Bitcoin over the last few years to make it easier to spend. You talked about the Lightning Network, Layer 2, which is just another kind of rail to facilitate the transfer of funds between users. Ethereum was supposed to be the vehicle for that, but developers seem to be concentrating on Bitcoin now. Why is that? Why is this shift? Ethereum gone out of favor, Bitcoin seeming to be back in favor.
Yeah, so going back to that earlier thing of lightning networks, there's no advantage to the smaller players that are using retail money to transact to one another, meaning that it becomes more expensive to what we know as cheap using cryptocurrency to pay. 10 cents or $10 in this case becomes quite expensive, even higher when the Ethereum network is really busy. Layer 2s do solve that, and they do create, on Ethereum, they do create this level of a bit more cheaper. But as we see Bitcoin become more popular and this more adopted uh, store of value function, the retail customer that's doing less than $80 as an average transaction may not want to pay such expensive fees when it comes down to the Ethereum network. And that's where the Lightning network, that's less than 10 cents, that's fairly cheap to move money to one another on a peer to peer level, I think becomes more advantageous than Ethereum. But as we look at Ethereum on an ongoing basis, I still do believe that Ethereum is the Microsoft of this crypto space, meaning that you're going to see a lot of larger institutions use Ethereum as a settlement layer, fundamentally because of the security functions within Ethereum. And we're going to see these byproducts of layer twos and layer threes come off Ethereum as this conduit as the network grows. But as we see this next transition, as Bitcoin remains as stable as is, that adoption will start to trickle in, and as adoption starts trickling in, these these side chains and these side products that are built on Ethereum, people are going to start looking at them as more, what utility and what specific reason can this be useful for, rather than this pump and dump that we've seen in previous cases.
Right. Let's talk about altcoins for a minute. We've already mentioned the Bitcoin dominance factor, altcoins being pushed into the background. But are there any interesting altcoin developments that have caught your attention?
So altcoins, not so much. I've been looking, and I'm still looking at a lot of the guys that are playing with zero knowledge proof, and the Moneyweb article that you posted around the aspect of what was it? How can Home Affairs use zero knowledge proofs? And it reduces, I mentioned to you, it can reduce the fee quite significantly if one person creates this ecosystem of zero knowledge proofs, and then multiple FSPs can validate that person's identity via the zero knowledge proofs. So I've seen it evolve. I'm watching it slowly take shape in the market, and it's sort of something that has my eye. Anything that's playing in the zero knowledge proof function is really caught my eye quite significantly. But when I'm looking at payment networks and stable coins and real world assets, there's nothing really done differently than what has been the last 2 years. Someone's taking a physical asset, they're tokenizing it, they bring it into the market, and it's creating this 24-hour market for that particular asset. If it comes to property, you're tokenizing shares, you're bypassing regulation, and the person owns that property through shares. And I think this is where it's gotten to a point of the larger players that have the utility and have the function to scale these products would trust would become the more dominant players, the Microsofts of the world, right? And that's what we'll see. It's where the utility is, where community is. And I think while everyone preaches community, I think it might fall very short in terms of utility because institutional players have stepped in so significantly. If we look at the FSCA, we look at the Reserve Bank, we look at any other major regulated play in South Africa. What does it mean? Does it mean that they're going to step in with using over-the-counter derivatives license to regulate FSPs that are participating in the futures market or creating crypto futures? Yeah, I think while there is, I'm sure the FSCA has stepped in because it's still considered a derivative product within FSPs. But I think it's going to be interesting to see how the smaller guys translate this. But there's a lot more opportunity for real world asset adoption and stablecoins in Africa than there is in Europe and America currently. Because we've seen the dominance of the tethers and the circles really control those markets.
Yeah, I mean, we've spoken about stablecoins a lot. They continue to smash all records in terms of adoption. People are really starting to understand the benefits and the low cost, the ease of transmission. More people that get, stablecoin wallets or digital wallets, the more this is going to continue to grow. Do you see this as the bridge between crypto and traditional finance?
I think it's to a level a bridge, but I think it'll become the next wave of money. So as money evolves in the world, which started from, let's say, rocks and shiny objects to what we know as paper money now, the next level is this currency which really supports and helps governments within Africa with a USD liquidity problem to really streamline adoption, get money moving a bit more easily in and out of the country. And I think that's where the utility lies. I think it'll be something concerning for banks and particularly central banks looking at M1, M2, and M3. But when we're looking at how does it unlock value, it significantly unlocks value to someone that has no bank nearby and they're in the middle of nowhere, particularly in Africa. And it's super hard to get dollars in and super hard to get dollars out. And we've seen participants, particularly Kenya, Nigeria government step in and say they're looking at something, they're looking at stable coins because the means of trade and the opportunity of the free trade agreement across Africa becomes more adaptable and quicker to adoption with stable coins, particularly because trade can move quite aggressively to and from significant countries because that liquidity barrier has now fallen away. It comes down to SARS to actually step up to the plate and say, look, we would monitor goods coming in and out with stablecoin payments, and we'll look at on-chain activity and those next phases. I think that's where SARS is most probably experimenting, but quite far behind in terms of where the market is currently pushing towards as well.
All right, we're going to leave it there. That was Shiven Mudli, macro strategist at 88. Thanks very much for your time, Shiven.
Thanks, Kiran. Looking forward to the next one.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.